I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
Hi everyone, welcome back to Be Rich. It's me, Vinod again. I couldn't get Anand in today, so some of the questions you guys have been asking me on Instagram, I thought I'll try and get some answers out for you from me. These are questions I think I can competent enough to answer, and I thought I'd let you know what the answers are. And if you still have further questions, you can definitely catch the slot next week when I'll be asking for questions to ask Anand, and you can ask further follow-up on these answers over there, and then I'll try and get Anand to answer them. Because sometimes the questions are too many, too much, and it gets difficult to get all the answers in a single video. This is the Candy Traveler who's asked me, can we invest a lump sum in Dr. Reddy once the split happens? Well, it depends. Depends on a lot of things, Mr. Candy, the Traveler. The problem is, what are your goals and what are your intentions and what do you want to do with the investment? If you are going to be investing for the long haul, let's say for the next 10-15 years, and you want to forget about it after you invest, and you have stomach of steel watching your investment of a lump sum, because lump sum is the kind of money where you get a heartburn if suddenly a lump sum becomes half its value. Let's say, for example, Tata Motors is there, and we've been hearing about all this great news about Tata Motors and the potential and this and that, and let's say you bought it at 1,100 rupees, you've invested one lump sum, you've taken 10 lakhs and you dropped it, clink, and then you see your 10 lakhs suddenly become 9 lakhs today. You will definitely feel a heartburn, no matter whom you are, whatever you are. Because the problem with lump sum is a kind of amount where it hurts when it moves. So that is my only issue with what your plan is. If you're able to invest and then never look at it again, never open your TP account, never log into the app and forget that you even put that money there, then you can. Because a lot of people buy gold, and they put it in the locker and they forget that how much gold there is. Then until and unless they open the locker and they go and they investigate and they find out how much gold there is in the locker, they take a kind of a tally and they're like, oh my God, yes, I forgot I have so much of gold. If you're able to invest like that in Dr. Reddy, then yes, what you say is very much possible. This is my only issue with what your plan is. Investing lump sum is a great idea if you have nerves of steel, and not many of us do. This is like saying, when it comes to dieting, a lot of people say, I can't do intermittent fasting. I will fast one day a week, but I do not eat the entire day, and the rest of the week I'll be normal. Very few people can do this. I know it's ambitious. So think about it. Think it long and hard, because the split hasn't happened as yet. It is going to happen. So you still have time to think about it. My suggestion would be, since you have some cash, look at investing in the market, in value buys, slowly here and there, keep nibbling away. And there, over a period of time, you can accumulate fantastic numbers and you'll be happy and satisfied with it because you'll see growth. For example, if you had been investing, let's say, in any stock after the pandemic downturn, over the period of the last 2 years, 5 years, you've been investing in steady rates, you'll be seeing very great returns right now. You'll be seeing returns of even the worst companies, you'll be seeing returns of 30 to 40% from the pandemic lows to now. And great companies, you might be even seeing, 100%, 120%. So this is the thing of buying slowly and steadily, even if the market corrects. I would not advise you to go dump all your cash in the market, So think about it. This is my honest advice. What Muthu RP is asking me is, people are speaking about STP to SIP. Is it really a good choice considering tax? Muthu RP. Well, taxation and investing is important if you're planning to take your money out of the market. That's when your taxation kicks in. With SIPPing, there is, and especially if you've gone for the new income tax regime, there is no real tax break which you're going to get through investing, unless you're still in the old tax regime. So in terms of income tax, there's no benefit which you're going to get in if you're following the new system. As far as taking money out of the market, you have only now, the government has said you have short-term and long-term gains. And those are the tax considerations you have to take and keep in mind. Do keep in mind, tax laws keep changing. When I started investing, there was no capital gains tax like this. From there to now, it's completely changed. So when you start investing, it's based on today's tax laws. But when you decide to draw the money out from the market, you'll have to pay whatever the tax laws are there on that day when you withdraw. It is not locked into today's date. Unfortunately, it doesn't work like that. So let's say you start investing from today and you need to pull the money out 20 years from now, then you will have to follow whatever the tax norms are there at that time. You cannot say 20 years ago when I put that lump sum in or I started investing, the rule was like this. Can't I do that? No, it doesn't work like that. So keep that in mind, Muthu, when you're talking about STP and SIP. Yes, taxation is important to consider, but it only kicks in when you start withdrawing from your mutual funds. These tax comes in, and I told you there is short term and long term. My advice would be talk to a good SEBI registered, advisor, and also have a good auditor on your call. These two things are important. Like I've said in many videos, 3 important things everyone should have is: 1 is a good lawyer. You should be on call, who you can reach. Second is having a good doctor who you can call, and third is most important is having a good auditor. And having a good auditor is great because they can provide you the kind of advice which is required to make sure that you're on the right road. So you do take this into consideration, Muthu, and get yourself some good advice. And Kaviraj Arjun is asking, HDFC Sky, good or not? Well, I don't use HDFC Sky, so I cannot tell you if it's good or not. But what I can tell you is what you should look at is the cost. What is the cost HDFC Sky is charging you to invest in the American market? Because I think Kaviraj is asking me in terms of investing in the American market, because they have an HDFC Sky where you can invest in American markets through them. So the question you should be asking is, how much money are you losing in dollar conversions? How much money are they charging you in terms of service cost? And what is the minimum investment they're asking you to make? Take that and look at that and study that carefully and compare it to someone like, IBKR, which is Interactive Brokers, I think. You can check them out and, compare with 2, 3 and see which one makes sense to you in terms of amount of money you have to commit, amount of charges they are putting, and the conversion to dollars, what is happening. So these things are what you should keep in mind. What I would strongly dissuade you from doing is investing in funds of fund, because investing in a fund of fund, what tends to happen is you're paying so-called fees twice or even thrice depending on the type of fund it is, because that's the way these funds work, fund of fund, because someone has a fund already and there's another person who's funding into that fund. So there's 2, 3 active managers in different layers, all taking scoops out of your profit. So in net result, you actually tend to lose in funds of fund. So that is what my advice to you would be. Okay. Same Kaviraj is asking another question, which seems to be, he's asked quite a few questions. So I guess he's worried that at least one of his questions gets answered. This is another pertinent question. How do I switch from one broker to another? Do I have to move my shares? And how can I move shares? Well, you can move shares because, like I said, first of all, the broker company, whichever you use, HDFC, ICICI, Grow, Zerodha or Chola, whomever you use, they don't actually have your shares. Your shares are being held in NSDL and CDSL in your virtual account, and it's in your virtual locker box, and it's tied to that broker account. So if you want to move, you can. Whenever you create an account, let's say with Grow or Zerodha or anybody, they give you depository note book, it's like a checkbook, and using that you can transfer shares from one to another. So you can move your shares. I would say if you're not happy with it, you can move your shares from one broker to another. Otherwise, you can leave it in cold storage. If you're not planning to sell it immediately, you can leave the shares in cold storage. It's a wonderful way of being like a value investor. Like I said, you put a gold in the locker and you forget about it, and generations it's sitting there. Same way, your virtual shares can be sitting there in your CDSL account, and just make sure that you keep checking on it now and then. Other than that, you can open another CDSL account and you can keep investing, like opening another bank account. So That's my answer to that one. A lot of you keep asking me for the so-called new patas list. We do not have any patas list. What I do encourage you to strongly to do is, if you're very keen on knowing what is Anand thinking, what is Anand doing, I advise you to watch all his videos. He does videos on various platforms. He's doing one in Hindi. If you can understand and follow Hindi, then of course his main channel, which is on MoneyPechu, which he talks in Tamil. He talks about companies and he talks about shares, and he talks about whatever he's thinking and whatever he wants, he's personally doing. Then he tells you, of course, you can take things into consideration if you want to. And he tells you what he thinks are overvalued and undervalued. So by following those videos and watching those videos, you'll get deep insight into what he's thinking. My advice also would be, learn from all this, see how to do it. I'm trying to teach you guys on Instagram, on my channel over there, and try and learn the skill of seeing and valuing and how to do it. Because once you learn how to evaluate and look at shares, there's nothing like having the freedom to do it yourself. And slowly over a period of time, you pick one or two companies, make mistakes. Everyone makes mistakes. Even Anand and me have made many mistakes while investing. But you tend to learn from them as long as you've not taken huge exposures into it. That is why Anand's principle of investing in small amounts, different coffee as he says it famously, helps. Because if your exposure is small and the risk is small, so that way even if small losses happen, you're able to take them and learn from it and move forward. So that would be my answer to a lot of you who keep asking me for this new patas list. I know everybody would love a shortcut. Everybody would love a cheat sheet, because we all are busy with life. We have work to do. We have families to run. So it would be nice if someone just tells us the answers to the question and then we're done with it and we can move on. Because we just want to make wealth, we just want to make money. Just tell me where to go and put my money so it doubles and triples. It doesn't work like that. I'm so sorry to tell you this. I'm sure there are a lot of influencers and people, traders who are on these platforms like YouTube and every other platform, trying to push these ideas that give me 10,000 and I'll give you 1 lakh within 6 months. Not possible. If you're gambling, sure. If you want to take that risk, sure, that's your choice. I'm not the one who does that. I don't propose that. That's why I keep on beating, saying that I'm not really registered. Please do not take this as advice. Do not go buy a stock just because I talk about it as an example, because it doesn't work like that. You cannot make money that fast. And anyone who claims to be making money that fast is definitely doing a Ponzi scheme. And we've seen many news reports about this coming, especially the recent one, the famous one from Assam or Manipur, I think the boy is from, and what he did on Instagram and whatever. I'm sure you can Google it and read all about it. So keep this in mind. Then Vineet Jeffrin is asked about what is the difference between a split and a bonus in shares. Split is where the face value of the share is reduced. Face value is the value which is assigned to the share per share. It has a face value, they say, of 10, 5, and then they reduce it. So each share, if they make it 10:1, if the face value is 10 and they reduce it to 1, each share becomes 10. So you're not actually increasing your investment. I mean, your capital has not increased. What has happened is your share of your capital, whatever your investment is, it's made into finer pieces. It's like you have one pizza and you've decided to cut that pizza into smaller pieces, so it's easy for you to sell or eat one piece, one small bit of the pizza instead of eating the whole slice. That would be a split in the simplest form. Bonus is where you get an additional slice of pizza. So if you have a company's slice of pizza they've given you, which you've invested and bought, then they reward you by giving you one free. So sometimes it's not 1:1. Sometimes it'll be like you have to have minimum four slices of pizza, then they give you one free, like what you get in Domino's. You see these offers coming. You must buy 2 pizzas to be eligible for the free one. Buy 2, get 1 free. It's like that. So bonuses work like that. Splits are what is existing for you. It's made into smaller fractions. So if you wish to sell it or do whatever you want to do with it, you can. In cases of split, like in Dr. Reddy, what happens is when the price of the share is very high and the share is split, it allows entry for new investors who don't have so much of money. It allows them, lowers the gate entry fee. So it's easy to enter this company and start investing. So that way prices start going up. So your overall share of the company will also start appreciating in terms of capital. I hope that answers some of your questions. I've tried to answer a few of them. I'll try and do this once a week at least. I'm by myself like this, so I can get more questions answered. Of course, I've asked for more questions on my Instagram today because I'm recording with Anand in the evening for his Tamil channel for Saturday. So those of you who do manage to catch me on Instagram today and have asked those questions for the Saturday video, I'll try and get them answered with Anand on the Saturday MoneyPechu video. which you can catch later on this week. Thanks, guys. Thanks for watching this video. Do share this with your friends and family, whomever you so think may enjoy this kind of content and might learn something from this. Thanks for watching this again. Do subscribe and turn on the bell notification icon, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.